Our next guest used to tell hedge fund legend Paul Tudor Jones what to do about oil. Bob McNally is founder and president of the Rapidan Group. He's with us from Washington this morning. So, Bob, let's just remind everybody what happened in oil markets. Brent crude, the international standard, dropped $2.50 a barrel, some 2% after those comments from Saudi Arabia, the Saudi oil minister Al-Naimi. But then it ended down just 1.3%. It's up today. What does that say about Saudi Arabia? Are they that powerless in this energy market?
Eric, what we're seeing is Saudi Arabia is losing its control over the global oil market. It's not a pretty thing to watch. Bouts of verbal intervention like yesterday can knock the price down a little bit, but for it to really work, the market's going to need to see the barrels from Saudi Arabia and see higher inventories to believe that this upward trend is broken.
You know, when we hear OPEC, does it really just mean Saudi Arabia, and how much control do they really have here?
You know, it really does. On the official data, Saudi Arabia holds the vast majority, I believe all, of spare capacity in OPEC, and spare capacity is the tool that OPEC uses to control the market. And as I said, OPEC, Saudi Arabia, has not been holding enough oil in spare to stabilize the prices in peacetime, much less when the market is fearful, as it is now due to disruption risks. You need about 5 million barrels a day right now in spare to stabilize the price. They've got about 2.5 million barrels a day at best. Market participants think it's lower. So that's just not enough in a tight and fearful market. I don't think it's going to come back to that 4 to 5 to 6 million barrel a day level anytime soon. And if that's the case, then the price mechanism is going to return really for the first time in 90 years to enforce the iron law. You can't consume what you don't produce. And that means more oil price volatility.
Bob, does it say more about whether or not the Saudis can be believed when they make these claims and statements and projections, or more about the balance of supply and demand, where the oil is coming from and who's consuming it in the global market?
You know, I think it's more the latter is what folks are really focused on these days. Again, market participants would be delighted to see the Saudis go to 12.5 million barrels a day. But even if they did, that would leave spare capacity in the system zero. And again, the fundamental tightness, the super tight inventories, especially outside of North America, or really the mid-continent. Europe, commercial inventories tight. Asia, tight. China, we don't know. The data aren't good, but certainly their days cover is well below ours. The only place inventories are heavy are in the mid-continent, where they might as well be on Pluto for all good they do the market. So really, it's a focus on those barrels, on inventories. The market is a lot tighter than folks thought it would be toward the end of last year.
What role do speculators here, or just players in the commodity markets, play in these oil prices moving up? Just yesterday, Julian Radcliffe from Chichester Capital was laying some blame on new investors, say from the equity space, who are starting to play in the oil game and really driving prices.
Look, market participants, whether they're physical or financial, can play a role in the days or hours for market movements. You know, when the SPR is used, it'll affect the price. When Pemex puts on a hedge, it'll affect the price for a couple days. When passives roll their positions, it'll affect the price. But over days to months to years, the trends we've seen are not explained by any new participants. There's no evidence of physical hoarding, which is what you would need to see, I think, to credibly believe that these new market participants, financial market participants, are distorting the price of oil. They're all involved in the formation of prices, but they're not distorting prices or, I think, responsible for the trends we've seen over several years, though they can have an impact hour to hour, day to day.
Bob, what about the Iran factor? We've been speaking for weeks and possibly months now about the threat of an Israeli strike on Iran, but there's a more immediate concern potentially about Iran, and that's whether or not Iranian oil is finding its way to market. You and I both know that the U.S. has been jawboning China and South Korea. It's had some success in Japan. To what degree is that playing a role in the crude price right now?
Well, I think we don't really have good visibility on what's happening to Iranian crude. What IEA is reporting is that we could lose by the middle toward the end of this year 800 to 1 million barrels a day, 800,000 to 1 million barrels a day, maybe even more. Certainly the shipping, the withdrawal of insurance protection for ships is having a big effect. And so I think the expectation is later this year, we're going to start seeing at least a storage of crude on the water in Iran, and then maybe even shut into their production. But I think what's alarming investors is the the thought that there could be a military conflict as soon as this summer that could threaten, the 17 million barrels a day that goes through the Strait. We're talking about an all-time, the biggest geopolitical disruption ever in the history of the modern oil market. And with tight spare production capacity in all of that north of the Strait of Hormuz, I think just that prospect sorts of alarm investors who had thought of Iran as boy who cried wolf. Remember, we've been talking about Iran since 2003. The market has gotten complacent about it until recently, never thought the Israelis would do anything. I think folks are taking just the general risk much more seriously. And absent better data on what's happening to Iranian production and crude at sea, I think the real issue is just that this wolf may be coming back in the village.
All right, Bob, thanks very much for enlightening us about what Saudi Arabia and OPEC really do mean in the world of energy and oil right now. Bob McNally, he runs the Rapidan Group, used to advise Paul Tudor Jones.